Greetings and welcome to this week's edition of Trade Theory here on Tuesday, March 24th, 2026. A quick programming announcement. There is a newsletter coming out at the turn of the month, around the beginning of April of this year, called the Vantage Point Macro newsletter. And I am was invited to be a contributing analyst to that newsletter. So we will be adding this analysis to that newsletter. I will share more details with you as that time comes to where you can subscribe for free to get some of this information in your inbox every week, and in an effort to help you with your portfolio allocation and managing your personal retirement or whatever it is you're working on using this data. So excited about that because we'll be able to help more people by me partnering and contributing to a larger effort to bring you better, higher quality information as relates to the markets. All right. With that being said and done, let's go ahead and get back down to what we came here for. So this is the dollar index. The dollar index closed higher above our supply side area of interest of 99.44 that we set on the 13th of March. And what we have now is two demand levels that I'm looking at. So even though this looks kind of weird to have a weekly demand level higher than a daily demand level, what I see as two possibilities are price could hold at this supply side area and actually turn this into a demand level, meaning that price could just continue to go higher, which would be awesome and ideal. But the second scenario is that price could continue to drop, so the dollar could drop in value over the next several days. And what this looks like to me, if it does that, is that price will be pushing, supply will be falling down to try to push this daily demand level of 98.05, possibly rejecting that and closing at or above the weekly demand level of 98.61. So being that the dollar is bullish now, we'll watch to see how this pullback plays out, or if it continues straight away off of this supply turn demand area, and then we'll basically move accordingly. So no need to take any action. This is more just to kind of let you see that the dollar could be dropping over the next several days or continue long, which is what I expect. I expect it to continue long straight away, but if it doesn't, we'll observe and see what price does at these other levels. Okay. Now moving on to the 10-year Treasury yield, we find that the 10x, this has actually played out very well considering all that's been happening in the markets, but this is actually run with our analysis quite smoothly. So price hit our target yield of 4.31 and blew through there. And so the next thing is what do you expect for the 10-year note? And so we're expecting demand to fall to where it could possibly retreat to the 4.15 demand level again, because our rates have gotten up to above 4.3, closer to 4.4 right now, actually 4.39 as we're looking at it live. And so that lets me know that there will probably be actually demand for it at this level, which will drive down. At some point, I think prices will drop again, and we'll get back down to that 4.15 level. But right now, yields have done exactly what we thought. The demand for 10-year notes has dropped, increasing the yields, and I think at this point, demand will increase, and then it will drop the yields back down to about 4.15. That's the plain English version of what I just said. Okay. All right. Now we're going to move on to some equities. We have the Tesla stock here. Initially, I said it started to become bearish. We had this downside area of interest at 385.77. Price did breach that level. So now we're looking for a daily supply level of 413.23. If price gets there, I'd be looking for a short to sell Tesla at this point. But right now, we're just going to watch to see, because price could continue lower. So we'll just observe and not take any action. All right. Moving on to Nvidia. Nvidia is still actually holding at our buy hypothesis level. So what we're looking at is to we'll see if it gets back up to our target level. But we're not going to do anything right now because price is in a channel consolidating. And so we're going to see if it breaks to the upside or downside, and then we'll move accordingly with that. All right, now moving on to the Bitcoin. Bitcoin hit our area of resistance, our pullback point from the 6th of February. If I was looking to sell, we had made a nice profit off of a previous sale back when it was at the $100,000 level. But at this point, I'd be looking to sell. So now price could try to retest this level, just shy of 75,000. And if it does, you could look to possibly short that with some stop losses back above the previous swing highs. But right now, Bitcoin is still bearish, and it bounced quite nicely off of our pullback point. So that was a signal for people who were interested in taking that trade to sell. But I didn't get in because we have some other things that I'm more interested in than Bitcoin right now. Now, WTI Crude obviously is interesting. You know, we profited from that pretty well. But now where are we, right? So price is starting to whittle out and you don't know what to do. I'm looking for a daily demand level of 82.8. So if price comes back here, I'd be open to going long on WTI Crude again at this point, 82.80. But if you're not comfortable with that, just stand aside and see what happens. Price could continue higher right off of where it is right now. So, but I wouldn't make any moves personally until price got down to 82.80 and looking for a buy. All right, gold. Gold is starting to pull back kind of complexly, but what I see is it's been a lot of bearish behavior. So what I'm looking at, price hit our daily pullback point from the 6th of January. We're looking for a price to reach this supply level of 5,044.86. Once it gets there, I'd be looking to short gold. I think that gold has had its run, so I'd be shorting at 5044.86. And if it gets there, then we'll set some downside targets for that. But right now, we'll just stand aside. Wrapping up with the 3 indices, we got the Dow 30 here. This turned significantly bearish. So closed out of our buy position that we lost position on. Okay, so we've got the demand level here at 47,985.28, and I'd be looking to short the Dow at that level right now. So no action on that. We took our L and we wipe our chin off and keep moving. All right. The NASDAQ 100, what is that doing right now? So the NASDAQ is hit our daily pullback point from the 12th. We still have a trade on a long entry from 25,148.40 back on February. But what I'm looking at now is it's still bullish, even though it's decelerating. It's kind of, well, there's a lot going on here. So what I'm looking at is a supply level of 24,795.40, and I'm looking to exit this position at that number for take that small loss clear near my entry, and then I'd be looking to short the NASDAQ right here based on what we see. So actually changing my disposition and looking to short the NASDAQ if it hits this supply level here. Okay, moving on to the S&P 500, wrapping it up. The S&P is bearish now. It hadn't hit our stop out. So what we're looking at, this one is to minimize our losses from back in February. So we're going to let it hit our daily supply level of 67.35.48, close out our position, and then look to short the S&P at that level once we get there. So that's my analysis for this week. I hope this is beneficial for you. Be on the lookout for more updates on the Vantage Point Macro newsletter that'll be coming out, which you can subscribe to free of charge. And until next week, enjoy the day and happy trading.